Good evening, everybody, and welcome to Metropole TV, the first 24-hour news business channel here in Nairobi in East Africa. This is The Smart Investor. I'm your host, Ali Khan Sachu, and it's a pleasure to be with you this evening. Welcome. Let me just start with the Kenya Eurobond and give you some perspective on what happened. Everyone thinks we actually got a very favorable rate. You will recall we didn't have the IMF precautionary facility, which was there to guard against exogenous shocks to the balance of payments. So we didn't have that added security when we were selling these bonds. Investors weren't getting the IMF credit wrapper, as it were. We still sold $900 million of 7-year bonds at 7%. Initially, the market expectation was 7.5%, so much better than expected. And 12-year paper, 1.2 billion, which was sold at 8%. And that too was sold better than it was initially expected. Market was expecting 8.5%, and therefore it speaks to a solid demand for Kenyan credit. It's a very favorable rate given that Kenya hasn't finalized an agreement with the IMF, said Venita Kotedia of EFG Hermes. It looks like investors were more focused on the credibility of debt issues out of Kenya, and they aren't too worried. Big difference, obviously, between what international investors are thinking and what local investors and economists are thinking. That is clearly the case. Pricing was much lower than the initial pricing thoughts. So look, this was a good result for the Treasury. I think they sold the right amount. They didn't try and overload investors. They got a good rate, and they've now managed to get the funds to redeem the maturing Eurobond. Investors placed bids for a total of $9.5 billion, an indication of Kenya's good macroeconomic backdrop as well as broader appetite for African paper. And remember, you know, we sold these bonds at a time when there are lots of uncertainties swirling around the world, not least the trade war, lots of other issues. It's imported contagion into emerging markets and frontier markets. So this was not an easy moment to sell this kind of these kinds of bonds. So I think all round they did well, and I think the government deserves a pat on their back on this one. And just to finally just reiterate, high demand, almost $10 billion of orders. So I think that's really quite something. So a big deal, a good deal, and a good deal for Kenya and the Treasury. Moving on, we had that interview about the maize shortage, about the big shortage that we were seeing here in Kenya. It turns out that our neighbors, Tanzania, have a 1 million ton maize surplus, and that they are supplying that surplus into the Kenyan market. This is a comment from Gerald Masila, Executive Director of the Eastern Africa Grain Council. There are good stocks coming in from Tanzania, and we're getting some too from Uganda. So that's a good outcome, because it looked at one point that there was going to be a massive price spike in the price of unga, and that's not a good thing anywhere at the moment, frankly. KCB National Bank, apparently, according to an announcement that went to shareholders yesterday, the all-share deal is expected to conclude in October. An all-share deal means you're not paying cash, you're paying in shares, and that's what's happening here. KCB shareholders will be diluted 4.8% in order to make this transaction happen. And KCB are saying it's going to create a 1 trillion shilling asset bank. That's $10 billion. Let's now turn to Africa. There's a lot of news coming out of Africa. Let's start, of course, with Sudan. This is the Sudanese military leader of the Transitional Military Council, Burhan. And he says the revolution has lost its peacefulness. So we halted negotiations for 72 hours. And basically, this is not going to fly. The army infiltrated the crowd. There have been some deaths this week, and absolutely nobody believes that the crowd has been has lost its peacefulness. So I don't think this is going to work. They are desperate to get everybody off the street. You know what it is. People are only strong as long as they sit in the street. The day they leave the street, it's over, and that's why they're desperately trying to get everybody off it. You know the quote from Kapuscinski, if the crowd disperses, goes home, does not reassemble, we say the revolution is over. Well, the crowd has not dispersed, though they keep trying, has not gone home, they keep telling them to go home, continues to reassemble. Therefore, the revolution is not over. Antonio Gramsci, who was a famous philosopher, said, the crisis consists precisely in the fact that the old order is dying and the new one cannot be born. And in Africa in particular, a lot of leadership we are realizing now is in the departure lounge. Bouteflika, for example, Bashir as well. There you see the two of them were meeting earlier this year. I bet you they didn't discuss the fact that neither of them would be in power if they were to meet again in the same year. And it's now turning out even Salva Kiir is getting very nervous, because apparently in South Sudan there's a group calling itself the Red Card Movement. You know, in football, if you get the red card, you're sent off. They're calling themselves the Red Card. They want to give him the red card. And he's getting extremely nervous, and they're looking at what's happening in Khartoum and thinking, well, if those people up north can get rid of Bashir, we can do the same to Salva. Salva's obviously not very excited by that prospect, and he said the following: any forceful attempts to seize power in the country would be met with violent resistance, he said. Violent attempts to usurp power from the people would be met with violent resistance, and the cycle of violence cannot end. But you see that? I mean, what we're seeing, it's like spreading like an infection. It started off in Algeria, came to Khartoum, it's now coming to Juba. Where's it going to go next? I'll tell you where in a minute. Now, we were speaking earlier about the million-ton surplus, but there's a very interesting article in The Atlantic, which is an American journal which puts out good research. And in that, they've got a story. Tanzania was East Africa's strongest democracy. Then came the bulldozer. The bulldozer is, of course, President John Pombe Magufuli. You can see him right there. He was prior to being the president, he was the Minister of Roads, and he was known as the bulldozer because he used to make things happen. When he first came into power, you remember, in November 2015, he walked unannounced into the Ministry of Finance, looked into empty offices, interrogated frightened staff, let it be known that a government long characterized by laxity was in for a major change. Africa took notice. All Twitter users across the continent adopted the hashtag. You remember, what would Magufuli do, to speculate how he might come and clean up their own governments. 10 months into his first term, Twaweza, which is a polling and research NGO in Tanzania, found that 96% of Tanzanians approved of his performance. Okay, 96% is Al-Sisi, Saddam Hussein territory, but I think that 96% really was accurate at that moment. Then Aiden Eyakuze, who's the executive director of Twaweza, did another survey, and at that point his popularity had dropped to 55%. And Aiden himself had his passport taken away. He was not allowed to publish that data. Magufuli's trying to control information, not happy about the way information is flowing. We had the restrictions on the export of grain, the cashew nut deal where, who knows where those cashew nuts are right now. I certainly know they're not edible. That's without a doubt. So basically saying that, the sense of democracy has been eroded, personal security of critics of the government is in jeopardy, and that some of these decisions have not been the correct ones. I think the impulses were right, but the execution was very poor. Your impulse, you want to get a better price for your farmers, well and good, but you've got to store those cashew nuts in order to sell them at a later date. And Tanzania simply did not have the infrastructure. So you could make all the noise, but what was going to happen the day after? We're yet to discover. There is also, obviously, we've been talking about this before, quite a feud between Rwanda and Uganda. They've closed that border. President Kagame said, those who think we've not seen enough of a mess and want to mess with us, whether from here or from outside, I want to say we will mess up with them big time. He might have the thinnest wrists I've ever seen, because I had him as my guest on Mindspeak, and he's got tiny wrists, but he's not the sort of fellow you want to fall on the wrong side of. Food prices have jumped in Rwanda because most of the food are imported from Uganda. Therefore, because the border is closed, you're seeing a spike in food prices. And of course, Uganda's land access to export markets in the DRC and Burundi is currently restricted. Christopher Kayumba, political analyst in Kigali, says there is a contest to determine who between them is the kingmaker in the region. So keep an eye on that. Now, this is the inflation rate in Zimbabwe. That was below 10% right until the end of 2018, and then boom, we're now running at 76% inflation. That means if you had 100 shillings at the end of the year, the value of that 100 shillings is 24 shillings. So you can see what I'm talking about. And that comes to my point that there is a correlation between high inflation, because then people can't afford to feed themselves and their families, they start getting upset, they've got nothing to lose, and revolution. We saw this same thing happen in Khartoum and Sudan, exactly the same playbook, and you've got it happening again in Zimbabwe. Now, in Eritrea, President Afwerki, who I thought had come out of the cold, he was being sent love letters by Prime Minister Abiy. They opened that border, but they seem to have closed it down again. And it seemed as if President Afwerki was being rehabilitated from the cold. However, it's now turning out that he's switched off the internet in Eritrea. And people are now sending messages via VPN. I remember at the time of the Zimbabwean trouble, Zimbabwe was closing the internet, and somebody said the government can switch off the internet, but not the frustration of millions of people. And I think essentially that is the problem. You've got millions of people in Eritrea who want a peace dividend, who thought they were going to get it and are not getting it. And that makes it the most dangerous moment for President Afwerki. And most people I speak to are saying he's got a very precarious hold on power now. But just to make one final point about that, according to the Internet World Stats, Eritrea has one of the lowest internet penetrations in the world. 71,000 internet users, no private media, and you can't access the internet via phone. Imagine that. Think about that. I think a whole lot of people here would be in revolt. Angola, after 3 years of recession, second biggest oil economy in Africa, right? Change of government from Dos Santos, who was there for years and years, and whose daughter was the richest African woman. And she said it was genius, but a lot of people said it was nepotism. But anyway, let's return to the issue. Angola returning to growth in 2019. This is Moody's. They're saying that probably grow at 0.3% after 3 years of contraction, worried about the debt, and of course you've got a voodoo FX regime, big gap between the black market rate and the official rate, and they've got to narrow that. Germany's Deutsche Bank are pumping in €1 billion line of credit to finance the country's trade, so you can see some positive green shoots beginning to appear. Abidjan, that's a photograph of Abidjan, Ivory Coast. It's growing at 7% a year. If you grow at 7% every year for 10 years, you double your economy every 10 years, by the way. That's why 7% is kind of a magic number. But very, very positive story coming out of there. African Development Bank, Adesina, estimates that 62% of our exports are primary products. So imagine this. We supply practically 75% of the world's cocoa. Okay, we get just 5.5% of the economic value. That's all about value addition, the fact we don't do enough value addition. And that's why value addition is a big thing and a big deal. Anything. You don't want to sell your tea loose. You want to put it in a nice package and name it something, and people will pay you more for it. It's the same thing with coffee. It's the same thing with a lot of our primary products. And it's a great shame that we haven't done enough about it, particularly, for example, the oil-producing countries who don't even refine their own oil. They have to send it out, get it refined, get it back in again, and then put it into the economy. Let me turn to this. Uganda tourism clocked $1.63 billion. That looks like it's a bigger number than ours. It's up about 20%, really strong number coming out of Uganda. The Ugandan economy is doing very well on the agricultural side, and tourism obviously is doing rather well as well. My last story about Africa. This lady, South African lady, is the first black African woman to reach the top of Mount Everest. And I think that was a great thing, and congratulations to her, Sare Kumalo. And I don't know what this means, but it says Bosso Kewena, which must be something like congratulations. First black African lady to get to the top of Mount Everest. What a great story. Now, let's turn to emerging markets. We've got a great guest, Kevin Ganga, coming up in the second half. Macro, EGM Securities CEO, knows all about the markets, talks the markets, lives the markets, breathes the markets. We're going to talk to him about this. This is the Brazilian currency. This is the Brazilian currency going and touching 4. In 2011, it was at 1.5. Now it's at 4, and this chart is telling me we're going to go to 440, 450 very, very quickly. And this is telling us of the weakness we've seen come from the China-US trade war. It's not just about China and the US, it's about the rest of the world as well. And you're seeing the infection spread into the emerging markets. This is one example. This is the Indian rupee. India is facing an election in a few days. And the Indian rupee similarly has crossed 70, in part because of the very strong oil price. They import all their oil. But the market has suddenly got a little bit nervous, and they're particularly nervous about whether Modi ji, the Prime Minister, seen here, is going to win a majority. There seems to be a lot of comment that there is a risk of a bolt from the blue around this election result. You've seen the currency weaken, and people will be looking very, very closely at that election result. India remains Asia's top destination for overseas money this year outside China, with net stock inflows of $9.8 billion. A lot of money. As you can see, big economy. Now we're going to talk with Kevin about this. This is crude oil. This is my chart. Kevin's got his own chart. You can see here, this was the fall. We got as low as 44. And this year we're up about, I think, 36%. This is US crude oil. Important to keep an eye on this. You're experiencing it when you go to fill your car, right? Your price has been going up month on month. That's because this is what's been happening. It's been going up and up and up. Today, we surged at one point over 2%, very jittery, worried about Iran, looking around the world, seeing it very dangerous in lots of oil-producing places. Libya is another example. Venezuela, well, they're probably out of the game now. But this is a key thing also for us, because we import all our oil. When it was down there, the shilling was getting through 100. Now we should see, let's keep an eye on the shilling as well, because we got to write a check, and each time that goes higher, we're writing a bigger check every month. And you can compare that to what you're doing when you're filling your car. But we're going to talk about that with Kevin in a little while. This is a great story. I love this avocado story, right? China want to buy all the avocados. I think they would give us an order which we can't possibly fulfill. Now look at this. This is American supply into America. That's the demand. Look at how the demand started to take off as avocado became fashionable. Everybody saw it as a super food. People were putting it on their toast. Everybody started to eat it, thinking that it was the best thing ever. And what it did is created an enormous demand. And that's why, you know, the president signed that deal in China with avocados. But what we have is a structural shortage of avocados for the global market, whether it's in the US or whether it's in China. And that's why that demand spike I showed you created this move, which happened in the 1st of April, which was the biggest one-day move in the price of avocados. That was because it was thought Trump was going to bring in some kind of tariffs on Mexican avocados. He didn't, but the story of avocados is a very good one, and it's going to remain, I think, a long-term positive story. So if you're looking to do some farming, go for the avocados. Alibaba, 51% revenue gain year on year. That's pretty good. Strong business overall, did not disappoint investors. Jack Ma was in Kenya 2 years ago, and he told me he started this business worth probably over $500 billion with $84,000 he raised in his apartment when he was staying in the States. Finally, let's turn now to a couple of more things I wanted to show you. This is an incredible story. This is German government bond 10-year. 10-year. For the Germans, once upon a time, it used to cost them 5%. They'd have to pay you 5% interest. Today, they don't have to pay you any interest. It's negative interest. That means you're going to give them €1 million. After 10 years, you're going to get less than €1 million back. This is what I call an extraordinary distortion that's been there now for many, many years. It's extraordinary. Can you imagine if we could borrow money at negative rates? That would really turn around our numbers pretty quickly. But that's just to give you an idea. Negative rates, and look at that trend. 1998, we're at 5%. Today, we're at less than 0. Where can it go? We're going to find out at some point. Bitcoin, best performing asset of all the assets I follow, up more than 100% this year, got above 8,000, got to 8,200. But you know, there's a lot of skepticism about Bitcoin. Lots of research has gone into it, saying most of the trading in Bitcoin is fake. People are just trading amongst themselves to create the impression that there is a lot of demand. And this article I was reading was saying what's happened is there's a loss of faith in the exchanges. These exchanges are Bitfinex, BitMEX, Binance, Kraken, and a ton of money has been leaving the exchanges. And one of the explanations, counterintuitively, for this rally is because there are less Bitcoins on the exchanges, creating an artificial demand. And in this article it's saying, listen to what this guy says. Given that the Bitcoin market can be manipulated in such a significant way, it would be a stretch, nor surprising, to find that manipulative activity is behind the recent run-up. Underlying market mechanics are similar to before. A lot of people talk about getting rid of the US dollar, but this is to tell you, this is how much the US dollar trades compared to all the other currencies. It's dominant. It's not going to be overthrown anytime soon. Not by Iran and not by Venezuela, not by anybody. So the dollar is still the king, and that shows you that evidence. We're going to talk with Kevin about the tariff war. That's Chairman Mao Zedong. This is Andy Warhol. It's probably worth hundreds of millions of dollars because most of Warhol's work became extremely fashionable. But the thing is, this is what the Chinese, this is who Ziyin, I remember I was telling you he's the only person I know in China who's able to critique the Chinese government in real time. The Chinese media wait for instruction. This guy says it as it is. He's saying, many people describe the current China-US tussle as the art of the deal, that was Trump's book, versus protracted war. And he says protracted war is well known among Chinese. as a strategy to exhaust the opponent. Protracted war was written by Mao Zedong in 1938 when China was fighting Japan. What he's saying is, we're strong, you can push us around, we're not going to give up. It's become a real battle of wits, hasn't it? And I don't know how they're going to back down. So on balance, I think this is going to become worse before it gets better. And the news with Huawei, which we'll discuss maybe tomorrow, tells us the direction of travel. Now, let's turn to the other big worry, which is what's driving up the oil price, as I showed you earlier, and that's all about Iran. Trump, sanction warfare specialist, he has closed down all options. The Iranians are selling very little oil. Apparently they managed to sell one ship to Iran, but otherwise they're getting no income. And essentially, Vali Nasser, this is a crisis that has entirely been manufactured by the Trump administration. People in Washington pushing for limited kinetic action against the Iranian regime to cut it down to size. We've got to keep an eye on Iran. There's a ton of hardware in the Middle East. The Iranians aren't going to take it, aren't going to just take it, lying flat on their backs. Highly volatile situation. If war breaks out with Iran, we're going to see oil price, which I told you was $63. That's going to spike to over $100. Will be highly problematical, not least for us as well. General Soleimani, who is the Islamic Revolutionary Guard Corporation commander, very iconic figure amongst the Iranians, says we are on the cusp of a full-scale confrontation with the enemy. Let's come back to all these points with Kevin Ganga, who's going to be my guest in the second half. He's the CEO of EGM Securities. He's a macro investor. He looks at all these global trends. We're going to have a great conversation. This was The Smart Investor. This was Metropole TV. My name is Ali Khan Sachu. See you after the break.